You are 18 years old. Your whole life, you've heard one single sentence. Education is the key to success. Your parents said it. Your teachers said it. Society said it. So you sign a contract, not just any contract, a contract for $50,000. You don't fully understand it, but everyone tells you this is normal. This is an investment in your future. 4 years later, you hold your diploma in your hands, and then comes the letter. The letter nobody explained to you. Your debt is no longer $50,000. It is $68,000, and every single month it keeps growing. Welcome to the biggest debt machine in history. You are 22 years old. Software engineer. 4 years ago, you sat with your parents at the kitchen table. On the table were brochures from 3 universities. The best one cost $18,000 per year. You didn't have $18,000. Your family didn't have $18,000. But there was a solution: federally backed student loans. Low interest rates, they said. Flexible repayment, they said. You only pay back once you have a job, they said, so you signed. Year 1, $18,000. Year 2, another $18,000. Year 3, again. Year 4, again. By the time you graduated, you had $72,000 in debt. But you were not alone. In the United States today, 43 million people carry student loan debt. The total amount, $1.7 trillion. That is not a number. That is a system. And you are part of it. Here is what nobody told you. Not the university, not the bank, not your parents. The concept of accrued interest. While you were studying, while you sat in lectures, wrote exams, slept, your interest kept running. Silently, invisibly, automatically. Your first loan, $18,000, interest rate 4.5% per year. That sounds small. But over 4 years of studying, without a single payment, those $18,000 had already become $21,500 through nothing but time. And then, those accrued interest charges are added to the principal. That is called capitalization. From that moment on, you no longer pay interest on $18,000. You pay interest on $21,500, and on the new interest, more interest is charged, interest on interest. Mathematicians call it compound interest. Banks call it return on investment. You call it a nightmare. And after this video, you will understand why. Let's run the numbers, because you deserve to understand this. You have $72,000 in debt. Average interest rate, 4.8%. Monthly payment, $750. You think, in 10 years I'll be done. But look closer. In the very first month of your $750 payment, $288 go directly to interest. Only $462 actually reduces your debt. After 3 years, you have paid $27,000, but your debt has only gone down by $12,000. $15,000 gone, disappeared into interest, and that is the best case scenario. What happens if you lose your job? What happens if you get sick? What happens if you want to start a family? In those moments, you pause your payments, but the interest never pauses. 6 months of deferment, your new total debt, $73,728. You owe more than when you started. And this mechanism has a name, and it was not created by accident. Now it gets interesting, because this is not just a story. This is your story. This is the story of Sallie Mae. Sallie Mae, founded in 1972, official name, Student Loan Marketing Association, originally a government-sponsored enterprise created to make education more accessible for people like you. A good goal. But in 1997, something changed. Sallie Mae was privatized. Suddenly, a private company had control over billions in debt. Debt of young people, your debt. And suddenly, your debt was a product, a financial product, just like mortgages, just like securities. Sallie Mae bundled student loans into packages, sold them to investors, made profit on every single student. On you. Do you remember the financial crisis? Do you remember toxic debt? Do you remember CDOs? Student loan bonds were structured exactly the same way, but they were not regulated like mortgages. Why not? Because student loans in the United States cannot be discharged through bankruptcy. You can lose your house, you can lose your car, you can lose everything, but your student debt, that stays. So you have to ask yourself, how is this possible? How can a system lend hundreds of thousands of dollars to you at 18 with no income without making sure you truly understand what you are signing? The answer is not naivety. The answer is lobbying. Between 1998 and 2014, companies in the student loan industry spent over $100 million lobbying in Washington. $100 million for one single goal. The Bankruptcy Abuse, Prevention and Consumer Protection Act of 2005. That one legal change made your student loans non-dischargeable, even in bankruptcy. Imagine you are a lender. Your borrower can never escape through bankruptcy. What does that mean for your risk? Zero. What does that mean for your willingness to lend generously? Unlimited. And what does that mean for tuition fees? They can rise and rise and rise because you will always pay with interest. In a single decade, from 2000 to 2010, tuition fees in the United States rose by 72%, not because of better education, because of guaranteed payment. Because of you. 3 years after graduation, you have a job, a good job, $62,000 a year as a junior developer. That sounds good. But look at your bank account. Monthly take-home pay, $3,900. Rent in a major city, $1,500. Food, transport, living, $900. Student loan repayment, $750. What is left at the end of the month? $750. With $750, you don't build a life. With $750, you don't buy an apartment. With $750, you don't start a family. You are not poor, but you are not free. And that is the real core of this story. It is not about whether you have a bad salary. It is about the fact that your salary, before it belongs to you, belongs to a system. A system that decided that your education was an investment, not for you, for the shareholders. $1.7 trillion. That is the total student debt in the United States. 43 million people, 1 in every 7 adults, 1 in 4 borrowers has already stopped paying. Not because they are lazy, not because they are poorly educated, but because the system was never designed to be fully repaid. It was built to run forever. You sit at your desk today, you write your code, you drink your coffee, and every time your paycheck arrives, a piece of your life goes to a system that you signed at 18. Without truly understanding it, no villains in suits, no dramatic explosions, just interest. Silent, invisible, automatic interest, and a system built to make sure that you are never truly free. If this story moved you, share it with someone who is thinking about going to college. Leave a comment. Do you have student loans? And if you want more stories like this, subscribe.